So what we will be discussing right now is the US ADP non-farm employment change, the release of which we will see in about 15 minutes. So right here you can see the anticipated forecast according to a poll conducted by Bloomberg, as well as the previous data of 130K. On the chart right here, you can see how the indicator has been moving and changing up and down during the course of 12 months. And what we can actually say is that according to ADP, the U.S. private sector expanded less than forecast in October, adding, as already mentioned, 130K, following a downwards revision to 145K in the previous month. Economists expected a rise to 151. Large and medium-sized businesses registered a rise of 81,000 and 13,000 workers, respectively, for the reported period, while small businesses added 37,000 workers. Service industries, trade, transportation, and utilities recorded the highest increase by 40K. Professional and business services recorded a gain of 20,000 jobs, while construction added 14,000 jobs. The government shut down a debt limit weakened job market in October, pushing the average monthly growth down below 150K, but this drop may be a temporary relapse. If we talk about the forecast a little bit more in detail, I will just again pull up a couple of estimates that we have right here. Hopefully you can see everything clear. Yes, so hopefully everyone can see all of the data. And what we can say about the anticipated forecast, economists think that we will see the ADP report for November post a substantially higher gain versus the previous update. If the forecast holds, we'll have a bit more confidence. For thinking that the stronger data from the government is accurate, in case the market will assume that Friday's official job report from Washington will bring more good news. In addition, what we can also say about some of the comments that we have received from Dukascopy community members who are traders and also participate in a wonderful Dukascopy fundamentals contest where they provide their opinion on what is the potential impact of a certain economic data release on the currency pair. And in this case, we've asked them to provide their opinion on the potential impact on USD Japanese yen. And as it happens that 65% believe that the impact will be bullish, while 35% believe that the impact will be bearish. What are some of the comments? Well, for example, Daddy Pappy, who is bearish, believes that regional surveys indicate a moderate rate of hiring in November, so this figure could surprise to the downside. The figure may still be strong, but the initial reaction to the lower than forecast number will dominate. As concerns one of the community members who is more bullish on the impact, he believes the employment number could climb as temporary vacancies increase during holiday season. So this is some of the main fundamental aspects with regards to the US ADP non-farm employment change. And now to move on forward, I would now like to give the word to Thomas, who will comment on the positive, negative, who will comment on the negative potential impacts of the data release. So Thomas, kick it away.
Everyone, I hope you're having a great day, just greater than I am. So yeah, first of all, I will be talking about possible negative surprise trading strategy. We'll be discussing it on the Australian dollar, United States dollar currency pair, and mainly it will be done due to the fact that actually the current market sentiment on the Aussie-United States dollar cross is strongly bullish. 72% of traders are already already long on the pair, and we'll soon put the trading strategy on the whiteboard itself. Another addition to this idea is that Aussie itself has a very strong bullish perception in the market, as 71%, in 71% of all cases, it is being bought. And I'm terribly sorry, it seems I am having some difficulties launching my screen sharing function. So I guess I will have to just tell the looking into my trading platform. So first of all, currently the pair is trading between the daily S2 and weekly S1 at 0.9035. And let me now just try to load my trading strategy. Okay, the current market perception of the pair. Okay. So yeah, thank you, Alexander. So yeah, as you can see, currently the pair is trading between the daily S2 and weekly S1. The additional thing which is coming to this, let's say, strong, in my opinion, strong support and initial idea is the market technicals, as quite a few of trending technical indicators point at appreciation of the pair, especially in the short term, which is rather important for us, right? However, it might be that the upside will be very limited, rather limited, as longer term trend lines and longer term trends are bearish, and let's say, for example, even the stochastic on 30-minute chart point at the turnaround and depreciation of the pair. So having this in mind, actually, where is my trading strategy? Okay. Having this in mind, it would be possible to actually buy at the market and put take profit at the mentioned weekly S1 at 0.9050 pause 4, and put stop loss at 90.23.3. So taking into account the current situation in the market, that the stop loss would be 12 pips below the current market price, and the take profit would be 14 pips above the current market price. Another thing which could be actually done is to put take profit for a medium term, let's say 20 minutes or so trade at around 0.9073, because there is apparently a strong support resistance area around there, as the pair was bouncing forward and back between it and mentioned weekly S1 for now 6 hours, if I recall correctly. Yeah, as you can see correctly. And daily pivot S1 is actually also located over there. So additional pressure will be put on the pair if it advances to that sort of level, right? Right, now let me just put the just mentioned facts in as a slide and see how it works out, right? So here we go. As I mentioned, buy at market, possible take profit first at least would be at the weekly S1 at 90.54, stop loss at daily S2 at 90.23. For those interested in, let's say, more medium to long term trading, it would be possible to put take profit at 90.70, whereas I mentioned for when it happened yesterday, for some good 5-6 hours, it was sort of hovering slightly below it, but supported with the mentioned weekly S1 at 90.50. So that would give additional 15, maybe up to 20 pips of possible gains for the traders, whereas the downside would still be limited by 12 pips lower to the current market price of daily S2. So yeah, I guess that is all what I wanted to say. Sorry for the technical inconveniences about the screen sharing, and thank you, Alexander, for helping me with this whole situation. So I guess that will be all from my side. If anyone has any questions or remarks, feel free to share them on the chat section, and I will give floor back to my colleague Alexander.
Already understood, I was speaking about the positive surprise trading strategy, which is based on US dollar and Swiss franc currency pair. So in this case, we assume that US non-farm payrolls will be stronger than expected, for example, 188K or even higher, and in this case, the greenback is supposed to appreciate, sending the US dollar Swiss franc higher. And the possible trading strategy could be with the entrance point at the market price, and currently the price is hovering at, so just a second, yeah, at the level of 90.90, just at the level of weekly support and the key support line in the short term. And actually a bit below this level will indicate further depreciation of the pair and a move towards 89.74, and it will be a move more than 40 pips. So once again, the entrance point can be at the market price, and the possible take profit could be placed at 90.55, and that's recent high, almost recent high, and the 4-hour pivot. So let me just slightly zoom in. Yeah, and the distance to the take profit is currently 38 pips. And as to the stop loss, it could be placed at weekly support, daily support at 89.74, and that will be, as I said, almost 50 pips. Yeah. So the main reasons behind choosing this pair is, first of all, strong bullish market sentiment, as 72% of traders are holding long positions on the pair. Meanwhile, the Swiss franc is sold in 71% of all cases, while the greenback is bought in almost 55% of all cases across the board. And as we assume that the pair will bounce back from the current level and will appreciate, then we'll need to have a look at pending orders. And as you can see, the majority of them in a variety of ranges is placed to buy the pair, with 68% of pending orders in the 50 and 100 pips placed to buy the greenback versus the Swiss franc, while in a wider range, across the board, almost 67% of orders are placed to buy the pair, meaning that even in a long term, the pair is likely to get some additional support from pending orders. Meanwhile, technical indicators do not give any of buy signals and aggregated. However, I would like to pay your attention at MACD indicator on hourly, 4-hour, and weekly charts, which is suggesting the pair will appreciate, also sending buy signals. However, as I already said, a move below current level of 19.16 is unlikely, as this level represents strong support in the short and mid-term, and even if the pair will be below it, then it will be a beginning of a new downside move towards 89. So on the 1-minute chart, as you can see, the pair is currently fluctuating at daily support, and it's just less than 10 pips below the 200-minute simple moving average. So the market reaction is already strongly bullish. Then with I see that the data is stronger than expected. It's 250,000, so that was likely to provide a strong bullish impetus for the market, and the greenback is likely to appreciate. And the initial market reaction is already more than 20 pips. So I guess the positive surprise trading strategy will be actual at the moment, and we can focus on 90.55 as already said, which is the almost recent high and daily pivot. So sorry once again, that will be just 23 pips left to reach this level. Yeah, and what's happening with the Aussie and greenback currently, and on the 1 minute chart that will be movement to the south equal to 15 pips, so just slightly more modest market reaction, you can say. Yep. And I guess that will be all from my side, and once again, as data is stronger than expected, we can expect the greenback to appreciate, and a retest of daily pivot is likely in the nearest future. Yeah, and I'm giving the floor back to Gita.
Thank you very much, Alex. Now, Dr. Dow, what are your thoughts, comments on the data, which is actually overly positive in comparison to what we were expecting?
Yeah, I was looking at I always try to combine due to the fact of my mathematics, I combine the story later more than earlier. In other words, yesterday's selling in the world equity markets and the U.S. market, I had to anticipate that news always precedes price action. So in other words, the prices move first and then the news comes second. I was anticipating the number to be relatively firm today, and it is. It's up 176,000 in November, and they're saying that they've revised October, and you have to assume that some of those numbers slipped out into the public, into the trading community yesterday to some extent. And when looking at the stock indices, and again, then it's another story again, is that why do I look at the stock indices? Because obviously the story is that if the number is good, then supposedly stock indices are going to feel some pressure because there is now even more hope for tapering. This long-winded, fantasy that the world is normal and that we can go right back to, or we are in a normal situation, when in fact the planet is, just incredibly flooded with liquid assets, and the major trading firms and the banks are the ones that have it, and the general public, is having a hard time borrowing capital from these places. And so you see the penalties this morning from the ECB with banks because they're not obviously lending money. They use the excuse that they're parked. The money is parked, and the reason why it's parked is that the economy is not growing and so forth. So anyway, looking at the labor numbers, it's not much of a surprise that it's firm. If you had to bet on it, you would have to assume that they would be firm because the stock indices are dropping, and news is always later than the actual fact. In other words, price precedes news. Price always precedes news. That's what I've discovered over the last 30-some-odd years, and my mathematics chases price and never chases news. So, then you have the holiday situation starting to kick in. Service, it was 18,000 in manufacturing, and I think there was 18,000 in construction, and then there was an enormous jump in service, obviously because the holiday season is kicking in, and you need to increase your employees for the sales force at the stores. So that long-winded Dow analysis basically comes down to the generalization, and that now I guess the next step you would really want to do is jump to Friday now and take these numbers and extrapolate them mathematically and try to figure out what will be the Friday numbers. And the Friday numbers and in other words, the Labor Department numbers versus the ADP have been breaking away from each other. That would be a good one for Dukascopy to do, is take apart the two numbers there, especially like Thomas or someone like that would like to take a look into that. Take a look at the trend, or Alex or something like that. Take a look at the trend of ADP over the last 6 months versus the Labor Department monthly numbers, and see the diversity between the two. That would be a good one to play around with. I'm anticipating now, a typical trader, we start to look down the road again. What is the next story? And the next story is really between the GDP tomorrow, which should be a non-event because the stock markets are very firm and that holds GDP up. But the next real number will be Friday morning with the labor from the labor numbers from the Labor Department. So I'm thinking that that'll be relatively sanguine, kind of sideways. There is rumors right now that it's going to jump enormously. It's going to jump enormously because participation rate's going to drop supposedly dramatically at 1.3 million. And that's the rumor out there right now floating around on trading floors. And that's why you're seeing weakness across the global stock indices, because then we go back to normality again. Normality. Anyway, that's docked out here in North America on the East Coast.